Good afternoon, good morning, good evening, everyone. My name is Paul Young. I'm just going to walk you through the current state and the future state of the Financial Planning and Analysis team, or as it's referred by the acronym, the FPA team. Here's my agenda. I'll talk about where we are on trends. I'll talk about the traditional model. I'll talk about the future, and I'll talk about some of my experience both as a financial analyst as well as an implementer working with clients across geography and industry to build out the right FPA solutions. Here's my bio. As you can see, I have well over 35 years experience. I've balanced it between doing FPA areas, crunching and reporting, as well as building financial solutions to drive better business outcomes. This kind of gives you an idea, but in a nutshell, what this is really talking about on the planning forecasting cycle. In order to really do this accurately, you really depend on data quality and the ability to integrate that data as part of your overall modeling. This kind of gives you the key challenges. At the end of the day, the FPA team is really facing a lot of pivoting, right? You have your annual budget process, which typically is the June to September into September, and then every month you're doing a forecasting of where you're going to hit for that quarter as part of the overall roll up to what messages are going into the investor community. That's not changing. What's changing is the instability of what you're seeing from quarter to quarter. That's why you're seeing a lot of organizations drop their full year forecast out because they don't have confidence from a quarter to quarter that they can make that kind of commitment. So you're starting to see a lot of pivoting. I've also seen from my review of financial statements, quarterly financial statements, is there's a lot of programs going around in terms of AI as part of embracing AI in terms of the data analysis, especially with smarter planning. I'm also seeing more and more pivoting around capital and just where the organizations can find savings as part of dealing with different changes in terms of regulatory or other areas that are driving global and domestic demand. As you can see, there's other areas in here, but they all relate to the close cycle and having the ability to close that cycle in a timely fashion. But I won't underestimate the need that we used to have distinct roles with business and financial analysts, and they are a distinct role, but I think there's a more pressure point to merge those roles because in order to be an effective FPA team member, you need to have not just the ability to crunch and understand accounting, finance numbers, and modeling, but also understand how they overlay into business. What is the future? I see less time crunching number, more time with the data, and that's a testament to the fact that we're seeing more and more business analytical solutions being adopted by organization. Most cases, anybody with $100 million business and above typically has some sort of business analytics solution that basically is a merge, has options between web and Excel interfaces to do it. At the end of the day, you're looking at autonomous financial processes because you don't want to spend all your time dumping in Excel and crunching. Those days are done. Will you have to do it sometime? Possibly. But that shouldn't be where your focus is. Your focus should be relying on the data feeding into your various models and just ensuring that your assumptions that you're doing in terms of your modeling, your base case and scenarios are accurate. Skill set now is you really need to understand AI. It doesn't mean you need to program the code. You just need to understand it, how that's being pulled in terms of what you need to do in terms of the variables that drive the different areas of your modeling. And you need to be an effective communicator. You need to sell ideas, and that's critical. My experience over the last 20 some odd years of implementing solutions is that automation's here. You can go look up companies like Board, Profix, or IBM's Planning Analytics, or OneStream, or other vendors. They are all actively looking for new clients, but they're also looking at expanding within those clients. But basically, they all have the same thing. They're all going to have a web or an Excel interface. And my experience is 50% of the clients use a web and 50% use Excel. The second thing is you need to go beyond the story and the scorecard. So typically you'll provide a scorecard and a dashboard. That's a moment in time. What you need to do is take that moment in time and then work on what you're going to do next in terms of inventory changes. Say you got slow inventory turns, how can I fix that? Let's say you've got a margin mix issue. What's going on with my pricing and with my customers? Say you've not optimized the distribution channel. These are things that you look at as going forward. AI will be embraced more and more. It'll just be more automated in terms of processes around the business modeling. I also believe in establishing the right metrics and ratios for corporate and business unit. The problem that's always a challenge is that depending on how the balance sheet is managed, it certain information isn't at a business unit's level, so you need to be cognizant of that. It doesn't change in terms of the overall roll up. The roll up pulls everything together. It's just that if you're going to do comparable comparisons between business units, you need to make sure your ratios are reliable and they're comparable. I'm a big proponent of using external macros and micro indicators because I believe we need to understand where our competitors are heading, where the market is heading, so that when we're looking at our segment reporting of our customers, we have an understanding of which ones are impacted by, let's say, tariffs on steel is a good one, or a major strike at a Boeing plant. How's that impacted? I've gone through this stuff in the past where we've had to kind of rework things because in our Seattle area, Boeing went on strike, and that was impacting directly a good chunk of our business. It could be where we've got oil sector companies and there's storms like a hurricane going through Texas is impacting offshore drilling. So it's important to understand that, and that parts of the planning process. Embracing risk framework in the FPA solution is critical. Risk is more and more on the scenario side, what if and all that, plus understanding the variance of what can happen as part of sensitivity analysis. The FPA team has to be more agile. It's not changing in that. It just means you need to be able to pivot. The organizations themselves have to pivot quickly. What suffocates organizations a lot of time is their corporate environment itself doesn't allow for agility to the point that you need to be. It doesn't mean you're going to be agile at everything, but you need to be tactical and make sure that you can be agile to adjust. And we need to constantly leverage technology to streamline the close consolidation reporting, because at the end of the day, when the books are closed, it doesn't mean the financial FP&A team isn't doing work before that, but you want one version of the truth that the GL is closed now. I'm working with that, and then you're pulling that together as part of your final phases of your forecasting cycle and what you're doing next as part of your overall scenario planning and what I call as the gap analysis. Here's some additional links. I do the stock market review all the time because I'm always big into metrics, because when I'm talking to my clients and prospects, I want to understand what their pain points are and where we head in terms of solutions, where their gaps are in terms of driving the right solution for it. Because at the end of the day, you're selling a solution, not a product. Here's how you can reach out to me, and here's some different things I did. Back in 2015, I leveraged SlideShare significantly to post content as part of sharing knowledge. I've also used LinkedIn for posting articles and blogs. I do that consistently because I'm all about knowledge sharing. I'm at a stage in my career where I'm a subject matter in many different areas, and I'm all about assisting companies to help them pivot to drive up their earnings, operating margin, address shortcomings with days sales outstanding and other ratios, and also look at overall asset management. Are we getting the right value for our assets in terms of our capital allocation? Thank you.